good day, traders. A copy trading session as usual. We got excellent results today in trading dollar, yen, and related currencies. I was actually trading quite well today, 170 pips, 150 pips in 10 minutes. But today we are here not for the XM Live, but actually for copy trading, guys. So what do we do here today? We will check how the performance of my favorite, I would say, copy trading asset has been going. Basically, guys, last time I was telling you euro dollar 250 was my choice. And what can we see from here, guys? In last 7 days, it made 5.84% gain, which still is very good result and still is proven to be, for me, currently one of the best robots where you can invest your money. I will repeat why I think this for all of you who haven't listened last time to what I had to say. So basically, guys, euro dollar 250 is robot, so it's fully tradable, fully traded algorithm, which means, guys, that there is no intervention from human trader in the performance. It's already set to work by default on some parameters which have been hard coded into the robot, and this robot doesn't have at least what I read from the description, it doesn't have any need for human intervention. One of the reasons for that is really what I think is euro dollar market. Look, guys, I trade every single day, and I am also professional trader. I enjoy trading, and euro dollar is one of the markets which is hard to trade if you really like volatility, if you like non-stop action. For me, for example, dollar yen and yen crosses are the best in forex now. Uh, Definitely, guys, best because they are something that give us volatility, and volatility is something that we always need. Volatility is something that we always need. It's always recommended if you trade intraday to have big range markets in your portfolio, like dollar yen, GBP yen. Yen crosses today are preferred because of the whole situation with risk on and risk off, the interest rate gap between Japan and US, and the overall geopolitical situation. However, this robot is trading euro dollar on a very good algorithm, and I can see here that the volumes that he uses, that this robot use, is something in between grid trading, and from time to time I recognize Martingale here, but it looks more at this point like it uses some grid trading formula, which is effectively something that many robots use. However, one of the things that robots use is they usually don't have stop losses. And for all of you who are manually trading markets, or who are, let's say, human traders, I say manual traders, not having a stop loss could be a little bit dangerous, right? So the thing is, guys, that robot, because it uses a hedge strategy with grid, uh, looks like it manages stops pretty much correctly. You can see here, for example, when you click portfolio, you see positions here, open positions. So you can see basically that there are a couple of positions open, and most of them are in profit. When it comes to robot trading, you should not be afraid of this, because I know, guys, if many of you actually experienced trading by systems which you use as manual human traders, we always say that use of the stop loss is a must, right? So if you want to use a stop loss, it's definitely a must. So we cannot trade. simply we cannot trade without a stop loss. All right. So what is the thing that we actually can do then? Well, guys, you already know that if you want to trade with a stop loss, you need to have a strategy that allows you to use that kind of trading environment. For robot, it's not requirement. For this robot, it's not requirement. And for many successful robots, it's not requirement at all, guys. You need to be well aware of that. Because most of the robots, guys, they will use this kind of stop loss management and money management to effectively make profits. If you take a look at close positions, you can see here as soon as the average of the all sum of all trades is positive, robot closes the position. And this is how robots work, guys. They look for the overall average. And when the average is positive, they tend to close all positions. All right. They tend to close all positions. And this is, I need just to show you the difference now between robots. For example, see how this robot is trading. And for example, see, I will just show you the example how I trade. And this is also featured on XM Live. For example, you can see here, I trade dollar yen, but I always use stop loss. I just open this position, which is now in profit. And if I close, I would close probably both positions right now, but I have stop loss here. And I will put stop loss myself, guys, here. Look. So I'm going to do this right now. 142.70. So I know what is my risk. According to my account status, this is the risk. All right. But look, robot, it doesn't need to do it because uh, the algorithm is so advanced that it can see the average of the all trades and close all positions immediately if the average sum of all trades is profitable. For us, it would be hard. For example, if I had 7, 8 positions like this robot has at this point, it would be hard to decide exactly when to close because I cannot, no trader can have the mind of a computer. So all these positions at some point of time need to feel full, the algorithmic close, and it will close them all in a second. And for us human traders, it means that we need to monitor the trade constantly in order to have a good close of a position. And this is something, guys, that honestly speaking, it's not possible to do it. You cannot just stare at your mobile or computer whole day to see where your positions will go. So still you would need to have some expert robot manager which will effectively close the positions for you. In this example, guys, here, everything is done automatically. And again, I will repeat, guys, if I had the opportunity to, let's say, now choose the robot which I would put my money in, it would be this one. Because I also look, guys, at other factors, used margin. Look at this, guys. It's a really low risk strategy. Uh, it won 84% of trades. Now, how can, you might wonder now, how can any strategy be so successful that it wins so big percentage? This is because, guys, a robot has pre-programmed entries and it will close most of them when, as I already said, when it goes into profit. So even for a very small win, like $0.01, it's still a win. And you can see here that the percentage of won trades is, well, I would say extremely high, especially when it comes, guys, to this market, as euro dollar is not the market that I prefer to trade on intraday time frame. You can see here basically that the robot uses slightly longer periods of trading in order to close the positions. Here you can just compare open time and close time. For example, open time was 26th of September, the close time was 27 of September. Here, 23, 27. So you see, it sometimes it holds them for a couple of days. But as soon as it sees profits, guys, it tends to close it. Look at the last positions closed. They are small profits. But overall, when you sum it all up, out of all these trades, they were closed in the profit. These positions that are open now, at some point of time, when they go into profit, they will be closed mostly in the profit. Now, the question is, what if it doesn't happen? If something happens, let's say, in the market and then you cannot close where you want it in profit. What then? Well, let me tell you guys that all robots actually have pre-programmed risk threshold. So if you connect your account to this robot, for example, you will get a risk threshold to choose. Meaning, guys, that you can set maximum level of the loss for this strategy. Let's say of a drawdown. We call it maximal drawdown. Let's say 50% is maximal drawdown. And when you set 50% maximal drawdown, then guys, the rest is definitely up to the robot. For example, I would allow more than 50%. If I'm to trade, I would definitely put, let's be honest, 70%, 80%. I would risk most of the account because, guys, I learned that over time, of course, and by trading professionally for more than 12, for let's say almost 15 years, yes, I've learned that only the surplus of money you can put into trading. So the money that you don't feel sorry for if you lose. So basically, I can allow 100% even drawdown because it's the surplus of money which I put, guys, into trading. For me, this is okay, but I know, guys, that many of you actually are not ready for such endeavor. So you can determine your own risk, 30% drawdown, 50% drawdown, whatever you feel good, you can do it. So this robot is still the first on my list to choose from. I simply will continue to follow this robot. And now you can even see that the risk here, which is used, risk score, the higher the risk score, the more riskier it is. It's very low. I mean, look, 6 is low risk. It's like moderate risk, right? But the risk is not moderate. In this example, this is, for me, this is low risk. Because usually if I choose the risk, I would go with eventually 9, 10. This is the risk that I would choose. I would go probably with 10. But in this example, it's even better that you can get very solid gains. All right, very solid gains with relatively, I would say, low risk score, right? Here, for example, if you click portfolio, you can see also which market basically it trades, and top winners and top traded, of course, is euro dollar. So this strategy is definitely optimized for the euro dollar. All right. Okay, so now let's check also other strategies. So, for example, look, this strategy is called euro dollar low risk. But the thing is, guys, that when you click this robot, okay, Very good result. We cannot dispute it. But according to the calculation here, the risk score is 8. So we cannot say it's low risk. Maybe for this trader, a guy or a person who is actually who supervise, look, it's supervised algorithm. So there are human interventions here. Maybe for some of them, this is low risk. But according to the calculation here, this is higher risk strategy. If you want, for example, to check the lower risk strategies, you can use the tab low risk, or you can use filter here, and let's say click, move the slider to desired risk score. For example, for me, guys, and obviously for the algorithm here, which calculates the risk, anything at 5 or below 5 is considered to be low risk. From 5 to 7, 8 is moderate risk, and above it's high risk. So, I mean, look, guys, you know what trading is about. Probably you traded at least once in your life. And there is one simple truth, guys: no pay, no gain. Without risk, there is no profit. It's the universal rule in the life. It's the universal rule, guys, for everything. So, for obliged to also mention low risk strategies, because not everyone will invest into moderate or high risk. From these low risk strategies, guys, you need to watch the drawdown and profit in relation to the drawdown. For example, here, guys, you can see uh, the result is good, 172%. And I would say still this is like, we can call this moderate risk strategy. Because, guys, 5, I would say from what I see is maybe even closer to 6. But definitely the results are good. Now, if you take a look at the trace, how it trades, right, you can see that it uses a form of martingale. It tries to compensate with higher lot sizes once the trade goes in different direction. And also when you check won versus lost trades, now compare this to euro dollar 250. 59.41, there we have like 86. So the first robot uses grid trading approach. This one uses martingale. It's normally, guys, for martingale to have more or less winners similar as losers. Because martingale is also like how you do martingale. You need to open positions until you run out of margin. If it's controlled martingale, then you have the limited number of trades you can enter before you stop opening your positions, right? So in this example, guys, I mean, look, what can I tell you? The situation is more or less clear. Uh, for me, this is right. We can take a look at quickly. Yeah, these are all close positions. Let me check once more. Yeah, this is martingale. You can see 0.01 negative, then it opens 0.03 to compensate for this negative result. You see, same day it opened, it went negative, and then it compensated with this. I mean, look, I also trade manually with controlled martingale. For example, all of you who follow me during my sessions, right? You know that I use control martingale approach. For example, if I lose 0.10 lots with 50 pip stop loss, next trade, which is around 50 pip stop loss again, 60, will be 0.20 loss. So I double the risk once my position has been lost. But I always start from the low risk. So for a robot, it's also important that it starts with low risk. And then if it has losing trades, it can compensate with martingale. And this robot actually does it. It starts with a minimum lot size 0.01. And then if it loses a position, it opens a position with double or triple the lot size, which is still low risk, right? Because it doesn't trade 0.10 and then 0.30. All right. So it's definitely it uses like 0.10 and then 0.01 and 0.03. When it comes to 0.10, well, if the strategy is successful, it would have already been closed everything in profit. So it will not need to go to 0.10. So you need to understand, guys, these kind of robots. Robots are not similar to human traders. They are completely different kind of this being supervised algorithm. I guess that the owner of this algorithm intervenes when it comes to maybe these lot sizes or maybe opening or closing their positions. Because guys, you know, it's not the same if you close with 0.01 and 0.05 or 0.50 lots. Simply put, this robot is also one of the things that, so I don't know, maybe I would also take a look at. Yes. Uh, Also, guys, look at the own funds traded. The higher the owned funds, the more, I would say, the bigger the chance that a profitable product is. Because obviously that if the owner doesn't believe in its strategy, right, in their strategy, they wouldn't put their own funds there. And look, I mean, $16,000, well, it's a nice investment, right? However, this robot performed pretty bad in September, where it actually lost gains that it created in June. Obviously, this robot is like 4 months old, and 12, 16. So it lost 30% in a single month. Yes, there are more winning trades, but for me, this drawdown of, would say, 30%, right? It's a little bit scary for 1 month. I'm not saying that this is big. This is not big in terms of the risk used. But obviously, guys, I would say that this strategy should be supervised. It has potential, but it's fully algorithmic, so there is no supervision from the owner. And yes, guys, it uses also, look at the lot sizes. It uses sort of martingale. But how good it is, it's not just enough to have martingale. You need to have profitable strategy in terms of entries also. Accurate entries, right? Now, if you put filter to the lowest risk score, guys, let's say 1, there are 3 strategies that I wouldn't recommend any of them. For example, here you can see there is no return and the drawdown is 41%. Here also. This one, totally bad. I don't know what kind of strategy this is, but it's actually underperforming. You can see here very good return. I mean, solid return for 1 month. Consecutive losing months. The only thing which is good that is the low risk score. So this strategy maybe will not lose your account, but it will also not make any gains that you can count on, right? So having all this in mind, guys, I would definitely stick to the proven result. And this proven result is uh, a strategy that has history. Look here, it's all is good. It has own funds, a lot of investors, low fees. Well, drawdown as drawdown. Every robot needs to have higher drawdown than human trader. It's normal. But win ratio is 5.14, which makes this strategy one of the really best here. And it has longer. I would say it has longer life. Here, guys, in 1 month, 40%, but this strategy is new one. It doesn't have very long uh, result streak, right? Now, let's pay attention to the strategy, guys, which is the most popular here. Looks again like euro dollar is very popular. But look, it says don't make any manual orders in order to win. It's supervised algorithm, meaning that the owner intervenes when something is happening in the market. Right. So, yes, here definitely it looks like this kind of strategy is working nicely. Now, when it comes to markets that it trades again, euro dollar. Looks like euro dollar is one of the popular assets, guys, for using robots or supervised robots. For me, gold would be more interesting, right? But obviously here, euro dollar is again the choice. I would still stick to better one, which is euro dollar 250 strategy. This one also caught my attention. This is scalping strategy. I can see by selling and mostly and closing the positions. Oh yes, this is scalping strategy. Still, the return for 1 month is good, and we need to check other months also to see the performance. So far, guys, excellent result from 72 trades. 97% wins and only 3% losses, guys. This is very, very good result. So yeah, if you have any questions, feel free to ask. Basically, we covered these strategies which I think are worth investing in and cover some of those which I would avoid. Uh, for the sake of cold mind, I would suggest something that has, again, good or longer history, good win ratio. Drawdown for me is not that important if the profits are exceeding drawdown by huge extent. I need to return back again, guys, to euro dollar 250 because, guys, it has a long history. Look, since 2023. It's also very important to, if you look at strategies, to check this tab also. Just don't automatically put your money somewhere where you see extremely good result but no history. It's not a good advice. For example, for me, if someone is asks me for account, I can show my account statement always, but I have longer history and I have a lot of withdrawals, which also is something that gets you confidence that you can put your money there, right?